Good afternoon. My name is Gillian Balaban, and I am Board Liaison Governance Relations at GRI. Welcome to this meeting of the Global Sustainability Standards Board, known by its acronym, the GSSB, held on 17 July 2025. This virtual meeting is being hosted from Amsterdam, the Netherlands. Please note that all public GSSB meetings are being recorded, and you can find the audio recording on the GSSB meeting webpage, along with high-level summaries of previous GSSB meetings. Present from the GSSB GRI Secretariat today are Bastien Butt, Chief of Standards, Harold Powells, Director Standards, and Matthew Dunn, Manager Standards. We'll now start with a roll call. Anne Lindsay.
Present.
Charles Chu.
Present.
Chalandra De Silva.
Present.
Deborah Ing.
Present.
Felipe Martinez Rodriguez. Galia Tsunkova.
Present.
Julia Genuadi.
Present.
Igazuma Okoroba.
Present.
Jeff Robertson.
Present.
Rebecca Coriat.
Present.
Tomu Machiba.
Present.
Yang Dong.
Present.
Susanna Muscat-Gorska.
Present.
And GSSB Chair Carol Adams.
Present.
Thank you, everyone. GSSB member Anna Nefedova sent her apologies. I will now hand over to the Chair, Carol Adams, to open the meeting.
Thank you, Gillian, and welcome everybody. If we could move to the next slide, please. The first item on our agenda today is to approve the draft summary of our previous two meetings on the 19th of June and our additional meeting on the 10th of July. Can I ask first of all whether there are any comments on the minutes or the summary of the meeting on the 19th of June? Okay, thank you. And the meeting, the summary of the meeting on the 10th of July, any comments on that? Okay, and I take it then that we can approve these two summaries. Is there any dissent? No? Okay, thank you. We'll take those as approved. And if we could review the action points from the previous meeting carried forward. Would anybody like to discuss any of those? Nope. Okay, thank you. And then moving on to the approval of or an update on policy submissions. Let's go to the update on policy submissions. No recent policy submissions, but I gather there are likely to be some being considered now with regard to the ESRS and the UK Sustainability Disclosure Standards. Are there any others coming up, Bastien?
Currently, these are the two that are on the radar of the policy team, and we've started work on the EU submission in terms of screening the recently released first drafts of the exposure drafts, but we now have to wait for the exposure drafts to be properly released, likely by the end of the month. And for the UK, of course, we have the proposal, and that will be prepared in due course as well.
Okay, thank you. I would imagine you'd welcome any input from GSSB members on those submissions, should they wish to make it.
We are scheduled to discuss the EU submission with the GSB before that goes live.
Yeah.
At least
Good.
that's was current timeline that we know is achievable. Should the timeline change, then we will certainly look at ways of engaging the GSB outside the meeting structure on it.
Okay, thank you. So that then takes us to a proposed change to the technical committee for the project on economic impacts. We have a paper regarding that change. Are there any questions on that proposal? Jeff?
Hello, I believe this was with Matthew. The only comment I would have is we list experience with sustainability reporting on an organization's impacts as kind of our first criterion. But I think we sometimes kind of take it for granted when we list the experience of the proposed members that there's sort of a connection there, or they do have that. So just a polite request would be in the future try to emphasize the sustainability reporting explicitly for our proposed member changes. But I take it from the folks that you're proposing there that they have this, but just helpful to make it explicit.
That's it. Thanks, Jeff.
Thank you.
Okay, thank you. And so then moving on, the next item on the agenda is to review the exposure draft on economic impacts. And there were a lot of comments from GSSB members on this exposure draft. It is a difficult one to do, I think, because the ideas are fairly new. It's not a tried and tested area. It's not that there's lots of new ideas, different ideas, and I think it's not a straightforward one to do. So that said, we'll pass over to Matthew. Thank you, Matthew.
Thanks very much, Carol, and good day to GSSB members. So as Carol mentioned, I'd like to bring the exposure draft for the revised topic standard on economic performance today for discussion with the group. So we can move on to the next slide, please, Joel. So I think first, just to mention, thank you all very much for all your comments and questions. As Carol said, there was quite a lot of engagement, so that was really useful for the project team. And we have tried to carefully provide all individual responses in file stage this week and the preceding week as well. And any outstanding responses will be addressed after this meeting for sure. I think it's useful here, just in light of what Carol mentioned, to provide a very quick background on kind of the broader context behind the standard and its revision, which I think may be useful for us as we dive into a more focused discussion in the following slides. So very quickly, just to remind everyone, the revision is for the GRI topic standard on economic performance. And the decision to conduct this revision was through the GSSB, of course, but in response to these kind of growing expectations for greater transparency around how organizations generate and distribute monetary flows and the impact that this ultimately has, right? So the GRI 201 standard, like all GRI standards, retains an exclusive focus on impact. However, I think what's important here is that the content of the standard does create, we believe, a unique opportunity to bring impact and financial data closer together in a way that we believe could enhance comparability, consistency, and usability of the standard for all report users. So with that in mind, we can just move on to the next slide, please, Joe. Great, thank you. So to begin with, we classified the comments that we received from the GSSB into 3 broad groups, and we've sought to address them via file stage, as I mentioned. The comments generally fell into these three categories, so I'll just very quickly go over them. The first being comments and questions on key proposals and approach. So these included things like requests for clarification on the rationale behind specific disclosures or requirements, as well as questions about alignment of various disclosures and requirements with other topic standards. The second grouping was suggested changes that do not require consultation with the project working group. And these were mostly editorial suggestions and comments, which we think we can address fairly easily. And then the final group was suggested changes to disclosures that do require working group consultation. So these include proposed adjustments or amendments to requirement texts or further updates or expansion of some aspects of the standards guidance. So these will, of course, be taken back to the working group for discussion and potentially also raised within our public consultation period. We can move to the next slide, please, Joel. So for this standard, we have received 66 comments from GSSB members, from 9 GSSB members at the time that this slide deck was finalized. I think we've received 1 or 2 more since then. But the 66 comments does also include add-on comments from GSSB members, just to make that clear. And we've categorized the majority of these comments as content-related or technical comments, while there were 3 comments categorized as editorial. So I think those are a bit more straightforward. Okay, I think we can move on to the next slide, please, Joel. So diving into some of the feedback that we received, we've picked out a number of comments that we thought would be useful for us to present on today, and just provide some of our observations around the comments that we received. So starting off, we received several comments during the consultation period with the GSSB members, seeking greater clarity on the use of the term monetary flows in the exposure draft, as well as the rationale behind its introduction. I thought that because this term is used quite ubiquitously across the standard, it was a good place for us to start and explain a bit more why we've introduced this term. So at the outset of the revision process, there was some concern raised about the continued use of terms such as economic value or value creation. So this kind of value-related terminology. And the concerns that were raised were that these concepts can be interpreted inconsistently across organizations, regions, stakeholder groups. And because of their subjective nature, they carry a risk of misinterpretation or oversimplification, in fact, when it comes to the actual data that is being reported. In response to this, we aim to ensure that the terminology in the revised standard reflects as closely as possible the data required to be reported by organizations. So this is why the term monetary flows was introduced as a more neutral term that focuses on actual financial transactions that are reported within the standard without the need for kind of broader value judgments. I think finally, just to point out that the definition and calculation of monetary flows, along with guidance on how to apply this terminology, are included in a lot more detail within the standard itself across the various disclosures. And this was developed and proposed by the working group and seeks to align with commonly used accounting language and terminology to support reporters in providing data that is consistent and comparable. So I hope that provides a bit of a clearer view for GSSB members on the use of this terminology. I think we can move on to the next slide. Unless there's any questions, Carol? Okay. Next slide, please. Okay, great. Thank you. So on my next point, we received several comments requesting greater clarity on the proposed introduction of a new topic management disclosure. So this is EP1 within the exposure draft. And there were also a number of constructive suggestions on how the disclosure could be further improved by providing more detail to support organizations in reporting effectively. So let me outline the thinking behind the new disclosure first, and then perhaps I can touch on some of these suggestions for improving the clarity of the disclosure and its requirements for reporters. So to start off with, the key objective of the disclosure is to provide essential context for interpreting financial data that is presented in EP2 of the draft, as well as throughout other disclosures across the exposure draft. It focuses on how organizations manage the generation and distribution of monetary flows. And so in short, really provides the rationale behind some of the numbers that organizations would draw from their financial statements. This was proposed by the working group because they felt that it responded to a key gap in the sense that while organizations, of course, routinely disclose financial data through their financial statements and as a part of their financial reporting activities, visibility into the policies or principles that guide these numbers and these decisions may be limited. So important to note, I think, is that we recognize that organizations already have a number of these policies on issues like compensation, investment, community contributions, etc. However, these are often spread across different internal functions and may be less clearly visible or connected to the financial data that organizations present to stakeholders. So really here we seek to strengthen accountability by bringing this information together in one place to enable report users to link an organization's stated intentions through its policies with the actual financial data that they would report in subsequent disclosures. So we see this as not dissimilar to the approach that was used within the GRI 207 tax standard, where we provided a number of topic management disclosures in order to understand the organization's strategy and its approach to tax before including a topic disclosure that asked the organization to draw on its actual financial statement data in order to report information on its actual tax practices. I hope that helps clarify some of the intent behind this disclosure. I think there were also several, as I mentioned, several comments raised about how we can make this clearer for report users. And I think there are several options available at our disposal. I think the first one naturally would be to work with our technical team to find a balance between providing guidance that enables organizations to understand what the requirements need from them in terms of actual reporting, and also providing greater explanation behind the thinking for the requirements themselves. Other options could potentially be developing a separate technical guidance document, which can also accompany the standard itself and provide much greater detail for organizations about the rationale linked to each disclosure and requirement. We can also provide a number of additional materials as part of our public comment period, including frequently asked questions, as well as key messaging and other articles that can be disseminated in order to ensure that stakeholders and report users are very clear on exactly what the standard is asking for. We can move to the next slide, please, Jill. So next up, we received a comment pointing out that the term monetary flows generated is used in disclosure EP1 without a definition, whereas in EP2 it's clearly defined. And without the context in EP1, the point was made that there's a strong chance that users will interpret monetary flows generated incorrectly, overlooking certain aspects of this monetary flow. And I think this is a very valid point. And the reason that this occurred is that we were concerned within the project team as well as the working group about repeating guidance across two disclosures. And as such, we prioritized the more detailed guidance in disclosure EP2, where we felt it would be more essential for reporting against the requirements there. So just as a reminder, EP2 is where we actually ask the organizations to draw directly from their financial statements and give quite extensive guidance on how they should report this type of information within the context of GRI standards. That's where we felt the detailed guidance around these definitions was more imperative. But it doesn't. We certainly appreciate that this could also be relevant within EP1 as well. So I think to address this, to propose solutions which we can present to the working group for consideration. Firstly, to revise the existing requirement to include sub-bullets which explicitly mention revenues and operating inputs as these two key components, and reporting organizations can then have a much clearer idea of exactly what they need to report against for this requirement. The second aspect is aligning the level of detail in the guidance of EP1 with that's provided in EP2. So I think the point that we would make to the working group, for example, is that the benefit of the clarity that this would provide to reporting organizations is likely to outweigh the cost of some repetition here. So this is something that we can for sure take back to the working group, and I think it's likely we can address it quite smoothly. We can move to the next slide, please, Joel. Okay, thanks very much. So we received several comments on whether the standard, or at least recommendations, comments that ask about avoiding duplication with financial reporting requirements, as well as information already captured within conventional financial statements. And this, of course, is an important question to address here. I think it's important to go back a little bit because, as many of the GSSB members may recall, much of the proposed revision to the GRI 201 standard builds upon what's called a value-added statement framework, which we discussed at a GSSB session towards the end of last year, and was strongly supported by the working group. So you'll remember that the value-added statement is a general purpose tool, which, when reconciled with financial accounting, seeks to provide general audiences with information on how and where monetary flows occur through the activities of an organization. So with that in mind, and in line with that approach, while the revised standard references and draws on financial statement information and financial reporting data, it is not to duplicate traditional financial reporting standards. Instead, the intent is to reframe existing financial information to provide a distinct perspective on the distribution of monetary flows, which focus on how these flows are allocated to various stakeholders as well as activities that the organization engages in. So here, really, the point is that this approach looks to highlight aspects of an organization's impact that may not be captured or reflected fully within conventional financial reporting. Any similarities between the data that we use and financial statement information, of course, is likely to occur, but the intent is very different and serves a very unique purpose, we believe. Thanks, Joel. We can move to the next slide, please. Great. So here I've noted several comments received that were linked to proposed EP3 disclosure. So this is a new topic disclosure for the standard. What I'll cover here are comments on the rationale behind the disclosure and then the indicators included. And so to address the first comment, just on the rationale for this disclosure, EP3 was proposed by the working group, again, very much in line with the overall objective of the standard, to kind of further unpack information derived from financial reporting data, and to reveal the organization's impact. So in seeking to move beyond these kind of headline financial figures, this disclosure builds directly on data reported in EP2, which presents a consolidated view of how monetary flows are generated and distributed, right? EP3, however, disaggregates that information by means of a set of indicators which are intended to offer a more granular insight into where monetary flows go, who receives them, and under what conditions this occurs. For example, region, employee category, gender, etc. Importantly, again, EP3 is not looking to duplicate what is already required under financial reporting standards. Instead, we're looking to reclassify existing financial data through this sustainable development lens, which gives us greater insight into the organization's impact. On the comments linked to the indicators themselves, I think I want to just begin by stating here that the current set of requirements within EP3 represents what we've called a minimum set of social financial indicators proposed by the working group. So this is by no means an exhaustive set of possible indicators, but rather it's a first attempt to capture a baseline of information that will be relevant for organizations. Of course, also keeping in mind that we need to manage the reporting burden of organizations. Hence, we are limiting it to this current set. I think the suggestions put forward by GSSB members on additional or refined indicators linked to these monetary flows were really valid. So the first one, for example, from Jalendra and Igazuma around suggestions related to monetary flows to local communities, I think is a really important one, as well as Deborah's suggestion on monetary flows towards environmental protection efforts and initiatives. So, I mean, it's for us, these are all important to consider and things that we will for sure take into our next working group discussion, as well as present as part of our public comment period to test with general audiences. And if it's the case that these are seen as more relevant for this disclosure, then we can definitely have the discussion with the working group to see how we can look to include them. We can move to the next.
Jalendra has a question.
Just a point there, Matthew, that especially in India with the BRSR, I think there is a 2% 2% CSR spend that which is a mandatory spend that has to happen by Indian companies. So this would get caught up in this point. So I think it's a good disclosure to have from a local community's point of view.
Mm-hmm. Thanks, Jalendra. Excellent. Okay, thanks, Joel. I think then my next slide is just more on alignment. So we received several comments from working group members, from GSSB members, noting that there were similarities between the disclosures in the exposure draft, as well as similarities to certain labor standards, as well as the tax standard as well. And of course, while there's some alignment, I think it's important to emphasize that these disclosures within the economic performance exposure draft serve a distinct, but we believe complementary purpose. We also see the requirements in terms of the data that is asked for as being different to what's contained within the GRI's labor standards, as well as the tax standard. And importantly, these all focus on different dimensions of impact. So the exposure draft for the revised topic standard on economic performance addresses impact from this monetary flow and accountability perspective, the economic dimension, whereas if we look at some of GRI's labor standards, particularly ones that are currently in development, the focus there is really on labor rights and how organizations look to make sure that they meet certain expectations when it comes to the type of ethical obligations that they should have around their employees as well as their workers. I think across the GRI standard system, we for sure recognize that organizations may already report similar data under other topic standards. I think in these cases, for us, organizations are always permitted to cross-reference disclosures where it's relevant, rather than duplicating the same information. So the priority is definitely managing the reporting burden for organizations and streamlining our system of standards. So I think we agree in the case of this standard that there are areas where we can make it more explicit for reporting organizations that this is something that may be possible for them if they're reporting against other topic standards where similar information is asked. We can definitely go back to the working group and test whether there are opportunities for us to provide more clarity through our guidance in this regard. I think we'll move to the final slide, please, Joel. So just on the final point, just to chat on next steps, I think as you know, I think we have another session in September with the GSSB where we'll seek approval on this exposure draft, of course, taking into account all the comments and feedback and suggestions received from the GSSB, taking this back to the working group and integrating it into the draft ahead of that session. Pending this approval, we will seek to go for public comment in early October and kick that off with a set of global webinars as well as more bespoke sessions, which we are currently planning, as well as engaging with our regional hubs to see opportunities where we can test this in kind of more regional context throughout the public consultation period. I think that's it from me, Joe and Carol. I'll stop there and open for any questions.
Thank you very much, Matthew, and for all your work responding to the many comments. Tomu.
Yeah, thank you. First, I wish to clarify, we have one more round of technical committee, and then we are going to the approval in September before going out for the public consultation.
Hi, Tomu. Yes, thank you. So, yes, that is our intention. So I think the aim was for us to be as comprehensive as possible in the discussion and the engagement with the GSSB at this stage, so that any comments and feedback you provide, we can implement, and that the standard would be public comment ready by September after us implementing your suggestions and taking these back to the working group. Where certain aspects, where we engage with the working group and they feel that they would like to take those aspects and test them in the public comment period, we can then do that. But that's the intention for now.
You don't normally present an exposure draft for it then to go back to the technical committee, present it with that in mind. I'm just wondering why in this case. Was it because of the comments raised by GSSB members, or are there still discussions to be had among the technical committee members?
Thanks, Carol. Yeah, so I think it was more about the timing. I see Harold's got his hand up.
Please focus. I think it's just because we have the space to do this now. So that's so if we have this opportunity. So the first intent was to have the approval today. Due to technical circumstances, we couldn't do that. So we have a little bit more time. So yeah, if we could sharpen based on the comments you gave, then we could take this. Normally we don't do it, so that's fully right, Carol.
Yeah, I do think some of the comments that have been made are worth really thinking about, particularly the fit with other standards, and how we articulate that, and how we articulate the purpose of this standard as an impact standard. I'm thinking how reporting organizations might view this. Some of the policy information, they might not think of what they do as a policy position. They might not have a written policy position on some of the things that you're asking about. So I guess it's maybe thinking about putting that in a language that reporters will understand, I guess.
No, that's
Does
right.
Anybody else have any comments? Anne?
Thank you very much, Carol, and thank you, Matthew. And I do think there's a tremendous amount of work that's gone into this. I do think we're seeking here to do something a little bit kind of like forward-looking in terms of like developing the thinking and building on the work that's been done in the past. So to be honest, I think it's helpful that we've had this little bit of extra time for discussion and reflection. And I just wanted to pick up on two things. I think from my perspective, Matthew, I think as you've fleshed out and presented to us now about bringing the information together to get this increased accountability and greater contextual understanding of maybe different slices of the pie, if I can put it that way, I think that's really helpful and useful. I wonder in the guidance whether that could be spelled out a little bit more, because like Carol, I think like the discussion and the introduction you've made have been really helpful, but I feel that doesn't perhaps come through as clearly as it could, you know, if you're coming to it with completely new eyes. So I hope that will be something that will be useful in terms of your next stage of process. And then likewise, just building on Tommy's comments online around the monetary flows concept, I think in a sense you have to do a bit more legwork, because this is like a widely used term, and yet as GRI we're using it in a specific way in this topic standard. So I think as you've kind of responded to our points, I find that really helpful. I think the only one where, just following your explanation, I just wondered with the changes that you'd suggested to disclosure EP1 being more specific related to the revenue and operating inputs, bringing forward that in a consistent approach with EP2. I did wonder if the technical group wanted to look at the line in the guidance where it talks about monetary flows as the monetary amounts generated as a surplus through its activities. I just think that surplus, you might have to just have a little kind of think about that too. But ultimately, I think it's really, kind of valuable work. And yeah, I think we're keen to support you, get the strongest standard possible out for exposure in the autumn. Thank you.
Thank you. Thank you. And Tomu, and then Galia.
Oh, hi, thank you. Thank you so much for your hard work. And this is a pretty difficult concept to handle with, and also important for GRI to make added value and to the other, disclosures framework, let's say. To use that value probably. But still, I believe the scope of this standard itself is quite narrow, and even like I suggested, even we should talk about more macroeconomic impact or non-monetary flow, let's say, and it's eventually might be quite difficult to handle, those making quantitative, but still, I think it's like, I would appreciate technical committee look at once more and carefully, and rather than just making the minor revision to the current draft, and before going to the public consultation. And one more thing about this monetary flow itself is, we are not talking about flow itself. It's flow by going to the stock, let's say, like movable, immovable capitals. So actually, you are talking about monetary distribution and rather than flows, let's say. And but also, I kind of appreciate and making more clarity on what's added value to the existing financial standard of talking about other distributions. Thank you.
Thanks, Tomu.
Thank you, Tomu and Galia.
Hello. Thank you, Matthew. It's really very detailed work. by the full team. My comment is general one. When we prepare whatever standard that is asking for people data, could be pension funds, percentage or benefits or remuneration, to consider that for companies, for reporters that are operating globally in very diverse geographies, it's difficult to consolidate sometimes because pension funds or whatever is for variable payment, not fixed but variable, could be very different from country to country due to the legal requirements, due to the peer benchmarks that is done everywhere because you have to be compatible to the market that you operate, and also based on the labor union agreements. In some countries, due to the labor union strength, the benefits could be much more than in other countries. And to aggregate, it's very difficult. It's a lot of manual work that sometimes the reporters cannot do, but they are able in general to disclose what they are doing, what are the minimum standards that they are following, and what is and how it relates to their impact. But just a number as a number is difficult to be collected, and it could stop the reporter to even report this information because of the complexity of these geographies. This is what we faced in the last years, especially for variable remuneration and benefits, because benefits like company cars or kindergarten, it's so different. We are not able to aggregate.
Thank you. Yeah, thank you very much, Kalyan. It's a great point.
And I guess to add to that, if we think about a multinational corporation operating in lesser developed and developed countries, then it's very relevant to show the impact separately by country.
Sorry, Carol, you said by country.
Yeah.
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 Gotcha.
Because it matters whether we're having a positive economic impact in a lesser developed country as compared to a more developed country.
Yeah, 100%.
So I think really thinking about, what is the economic impact that we think is significant here from a sustainable development perspective?
Yeah.
That a large organization might have, and how do we draw that out through this standard?
Sure. Great.
Maybe to ask for emerging countries to be a separate item.
Thanks, Kalyan.
And, where a multinational company has subsidiaries in lesser developed countries, and I guess there's also a question around transfer pricing and profit on goods transferred from one subsidiary to another, and what the impact that is on the different economies involved. Particularly again, where one of them is a lesser developed economy.
Yeah. I think within the social financial indicator disclosure, we include region. I think that I saw your comment there, Carol, that was around the products and sales. I think you mentioned the transfer pricing comment. So this aspects about region to kind of pull out whether this impact is happening in higher income or lower income countries. We can definitely look at that there.
Yeah, I guess, keep in mind the sustainable development lens as you think about it. Yan Dong.
Yes, I have a little bit more stupid question. Maybe it's just me who's not really a financial expert. I'm just wondering, when you're talking about the operational cost and the revenue, does they have the same terminology all across the world? I mean,
Yeah.
yeah. No,
sorry.
It's just one. Remember that when we're doing the taxonomy thing, the operation cost is really killing us because it has so different terminologies in different jurisdictions and what we should consider, what we should not consider. So I'm just wondering, How do you make this kind of uniform across different regions if you have this multinational country or companies?
Yeah, that's a good point. I think the formulations that we have presented here within EP2, they are quite standard and quite general here. So I know that across industries, your operating costs and inputs may be different. So we've tried to keep it at a high level enough that organizations, regardless of industry, can look to provide this information. But how we've presented revenue, operating input, for example, this is all taken from, financial reporting approaches. We have several working group members that have quite a lot of expertise within the financial reporting and accounting space, and I think they try to develop these to be as inclusive as possible. But we can see if we can make this again, if this is something that organizations are all able to report against during the PCP as well. We can test this for sure.
Thank you.
Thank you. Are there any other comments or questions from GSSB members? Matthew, do you have any questions of us?
No, thanks, Carol. I think again, we've got all your comments written down. I think they were really useful, and we'll take them directly to the working group and use them as part of our preparation to update the standard slightly and see how we can make it clearer and ensure that it's report ready for the organizations that we'd like to use the standard. So thank you very much.
Thank you. And I think it's been very helpful to have this discussion at this point in the process where it goes back again to the technical committee, particularly on a topic which is, I think, somewhat challenging. Important, but challenging and different. So thank you.
Thank you.
Okay, so moving on to item 5. This was about we have the questionnaire here to go with this standard, and I guess this will come back to us again. But did anybody have any comments on the questionnaire as it is now that's been developed for this exposure draft? Anne.
Thanks very much. And a big thanks to Matthew for the work that's been done. I just did share this. I couldn't find a way to do it on our stage. So that I did feel that one of the questions was a little bit leading at the moment in the proposed questionnaire. And I think when Matthew did his presentation, he mentioned like open questions in the sort of like the final questionnaire. So it might be something that you've already looked at. But it was just on question, I think, 2.4. Do you feel that disclosing this data aligns with your social impact report, either published or planned? Do you hesitate to disclose the data because it might undermine or diminish the message of your social impact report? I was suggesting that you remove the second question, which I personally found a little bit kind of pushing people in one direction, and just ask them if they don't think it aligns, why not? And then I think we might elicit kind of like a broader range of responses. So that was just a tweak, really.
Thanks very much, Anne. Yeah, that's really useful. Thank you.
I think it would be useful to ask about the connection with other GRI standards, because this does touch on a number of different standards. I think it would be useful to ask whether the connection is clear and whether it makes sense.
Noted that down. Thanks, Carol.
Okay, thank you. So that takes us on then to the next item, which is the looking again at the Global Reporting System paper. that we've been
Hi,
working
Carol. I apologize for the interjection. I just had my hand up for the prior item, please.
Oh, I'm sorry, Jeff.
No problem.
See that. Go ahead.
No problem. Just a minor suggestion, Matthew, for the next transmission to the GSSB. I'd recommend if we could put the survey itself on file stage as well. I think there's a lot of benefit of seeing each other's comments, and there's probably lots of situations where 3 or 4 people have the same thought, and then it gets quickly addressed, and it's more efficient and transparent. So just a suggestion there.
Sure, not a problem, Jeff. Thanks. Can do that.
That is a very good point. Thank you, because then it doesn't have to rely on being carried over from the summary of a meeting.
Thank you.
Yeah, thanks. Harold.
Yeah, one small practical thing on that. I assume you all agree that we could do that 2 weeks in advance instead of the 3 weeks we do with the standards. Otherwise, everything starts to pack for the people working on it. So a little bit less time to react on the questionnaire. I assume it's not a problem for the GSB members then.
It does seem reasonable, Harold, because GSSB members should be going into the file stage more than once. So looking at the standard and then going back again to look at responses to their comments and seeing the comments of other GSSB members. So at that point, they can also look at the questionnaire.
Okay.
You.
Yeah, it's just process-wise that we align it also with standardize it also for sectors. So for all the standards we bring and questionnaires. Thank you.
Okay, so moving on then to the global reporting system, we have some input from the Stakeholder Council, and we also have a paper. So let's talk to the paper, and then we can come back to the input from the Stakeholder Council and consider whether it addresses the input that we've had from them. Bastian, did you want to speak to this item?
Not in detail. So what we're presenting today is the follow-up on the discussion that we had on the paper, and we outlined the changes that we implemented based also on the approved summary. We did not apply any further changes outside what we had discussed with you at the time. So there are no, from staff perspective, it is really the closing the loop on the feedback provided on the earlier version. We had then, of course, coming in parallel, the recommendations or feedback of the ESSI, and that is something we haven't directly addressed as such in the paper just yet, because we first wanted to give you the opportunity to discuss it.
Okay, thank you. So we can come to that. Before we take comments on the paper, I just want to ask about the last sentence on the description on the front page. So this paper was initiated by the GSSB. We've asked for feedback already from the supervisory board at our March meeting. I think that any ask for further input, and I do think it's always valuable to ask, particularly on a paper like this, which is why we asked for it from the supervisory board in the first place. I think the ask should come from the GSSB, and the feedback should come to the GSSB. It's mentioned here as a joint GRI position, but I think on the conceptual part of this work, that the input should come to the GSSB for that thinking. So we should be getting input from the supervisory board, the management board if they wish. We have it now from the Stakeholder Council, and then we take a view on that different input. I don't know whether you had a different intention, Bastian, or whether it's just words here,
No,
but I
I
think
think
it's important to clarify.
I think I would agree that this is the basis, because none of the other governance bodies have developed a position in a similar way. So this needs to be the basis. But we're inviting feedback on the current draft. That's the proposal, to further refine it. There is, of course, in light of the overall strategy of GI, where this is really anchored for the whole organization and a strategic priority, the whole organization needs to be behind this eventually. So this is about the next step, that there is a more discussion with the supervisory board, the SC potentially. I don't know, depending also whether you want to go back to them, of course, and based on what we're discussing today, and the management board can provide input as well.
Well, certainly in making it happen, it will involve other areas of GRI. But the conceptual thinking here has started with the GSSB. This is looking at how it might work conceptually. And so I see this as a GSSB project where we have invited and will invite again input from different boards. We can also go back to the stakeholder council. We certainly need to respond to their input and give a response. So, and it's good that this initiative that we've taken has got into the GRI strategy. But I think in terms of the conceptual part of it, the GSSB needs to have that oversight.
Yeah, I think as that there was no intention to say that this is not a GSB project. You initiated the project, but it will have to be approved and supported by the whole organization as a position of GRI. Eventually, when we go out and promote a global reporting system, I think alignment between the governance bodies is important, and that we have yet to achieve, I think, on basis of a full proposal from the GSSB. So that's the next step.
So I think we get the input and we address it as we see fit. And then the discussion is, well, what do we do with it now? And how do we go about any implementation? And that is a broader question. That one will certainly involve the whole of GRI and the supervisory board and the management board. Okay, I think, are we all clear there then? Everybody happy about the approach there? Okay, so are there any other comments on this paper, which has come a long way, I think, from its early beginnings when we first discussed it. So well done to the team for incorporating all the input. Thank you, Jeff.
Thank you, Carol. Thank you, Bastian and the team. Just one comment from a reflection I had here. It may be an editorial, or more so an editorial comment, but on line 155, we're listing sort of the 3 key types of information that stakeholders are seeking in corporate reports. And we say, you know, part C, impacts on economy, environment, and people to promote sustainable development. For one, the sort of format of this heading differs from the prior two. And I just thought it could lead to some confusion or at least ambiguity as well, because obviously many impacts will not promote sustainable development. And maybe do we mean, you know, impacts vis-a-vis sustainable development or as it relates to sustainable? I thought we could A, make it consistent with the other headings, and B, clarify that it's promoting sustainable development as part of the mission and vision of GRI, but not all impacts will do that, right?
No, fully agreed. This is a good point. So bringing this in line with the language that we have in GRI 1 So contribution to sustainable development, which can be both positive and negative, is probably in order here.
Appreciate it. Thank you, Bastian.
I also wondered on that particular point whether we should reiterate that the GSSB believes that most, if not all, of an organization's most significant impacts will lead to risks and opportunities that will become financially material over time. This is something that we have agreed upon previously. Jeff?
Yeah, at least perhaps mentioning the interlinkage. I think the in the same area, we mentioned dependencies, risks, and opportunities, and then pretty flatly then refer to the IFRS S standards by the ISSB. Whereas Carol makes a good point that there's a deep linkage, obviously, between impacts and risks and opportunities. And we have a whole project dedicated to that. So forgive me if it's explicitly mentioned further up, and I've just forgotten since reviewing this. But maybe a further bit of verbiage to connect those concepts and get away from the idea that impacts are totally and GRI reporting are totally separate from risks and opportunities would be helpful.
On the section B, just above that, taking these bits together, I think perhaps it's worth noting that it doesn't cover the financial consequences of an organization's most significant impacts. Because that's one of the arguments for this project on the link between impacts, risks, and opportunities to connect the two projects.
So on the first point, we can in C we can certainly amend that. Just I need a bit more clarity on the on that point about B. Not sure that I follow it completely. What would be the change that you would look to implement there?
Well, it talks about there being an extension of the financial report. But it's perhaps it says what it does cover, but it's perhaps worth noting that it doesn't cover the financial consequences of an organization's most significant impacts.
So that there are additional things that would come through that link. Yeah, we can look at a formulation to do that. Yeah.
Does anybody else have any other comments? I do have a few more. Anybody else have any? Okay, so then if we go to line 17 to 18, and it says the purpose of reporting with, it's talking about the ISSB standards. Could we add a reference to their language for that? Just take that as agreed. And also on line 41, where we refer to general purpose reports, could we link to a definition of general purpose reports? UNCTAD have had a definition, for example, for several decades, since the 80s. Yeah.
Of course. I think where we should we can definitely add the definition, and also for the language, I think that we assign to the ISB colleagues, that's something where we could look for the right reference. We also have yet to engage them, I think, on that section, so that they can also outline whether that is all still in keeping with the language that they're handling. So yeah, we can definitely action these two.
Anne.
Yeah, sorry.
Before I continue.
We've moved on a little bit from the point, but it was just in response to your point, Carol, on adding the point about in section C, related to the GRI's recognition that often these impacts can ultimately have a financial contribution. I think it's good to include that idea, but I'm also like really keen that we're not in C, like ultimately justifying the reports on impacts on a financial grounds. So I wonder whether, rather than adding that in point C, we can add that into the final paragraph, summing up the kind of approach. So just check which lines it is. I think, yeah, so it would be the lines beginning 162 to 168, where we could make that that point that you've mentioned, that the impacts will often ultimately have some financial impact and relevance. But I think we want to be strong in saying that under point C, we see the value of reporting on impacts in their own right.
Yeah, yeah. I just took those paragraphs as also showing the connection between the three types of reporting. So perhaps we can achieve both somehow. Jeff? Can you say what you have put in the
Sure.
chat?
Yeah, I just didn't want to interrupt the flow. It was just on the prior point about quoting the ISSB. I think that's the strongest approach where we can when we're describing their work and standards, just for the greatest clarity and elimination of ambiguity.
Okay.
So
Thank
just
you.
agreeing with your earlier point, Carol. That's all.
Thank you. A couple of other points on line 47, where we refer to this corporate reporting tool. Can we specify the tool? Lines 49 to 50, where it says corporate reporting remains effective and relevant when adopting an impact-oriented approach. Can we say is effective and relevant? Because it sort of raises questions about why would we say remain? I think it just is effective and relevant.
We can make that change, yeah. I think the logic was to argue from where the majority of companies is and what they're entering, and that what they're bringing in terms of practice and principle-based approach, and all of that works also in this new context. But yeah, we can maybe we can change that to this.
Thank you. And on footnote 4, can we put this in terms of both sets of standards drawing on the National Gas Protocol, and therefore the disclosures being the same, the numbers being the same? Rather than imply a one-way equivalence?
Yeah, this is the language from the agreement, but we can look at this, of course. Yeah.
Yeah, I think GSSB members were happier with the wording around drawing on the National Gas Protocol, the Greenhouse Gas Protocol, which seems appropriate because that is the source of our disclosures on emissions.
Yeah, so both formulations are in the agreed. So we will take what we can do is we can take from the agreed language in the body of the text of the agreement, right? Because it's both things are mentioned there. Both what we have here now as a sentence, but also the link with the GSSB protocol. We will just put it in there, a quote from the agreement.
I think the link with the GHG protocol is the strongest, and the one that GSSB members were happy with. That was something that we did discuss at our meeting in March prior to approving the standard. not the agreement didn't come to the whole GSSB. Are there any other comments on this? Okay, then. Well, Tomu, do you want to say what your comment is?
Yeah, line 76 and here GRI impact disclosures inform IFRS S standards disclosure on dependencies, risk and opportunities. I assume IFRS it's risk and opportunities, and how you included the dependencies here.
Okay.
Yeah, I think the risk and opportunities is shorthand because risk arise from dependencies as well, and that is explicitly acknowledged. But I think we would iron out these things also in reviewing the references to the IFRS literature with the colleagues at the IFRS, right? Then they can give us the steer on it. I said they have also the dependency notion in their framing.
Okay.
It's not only the system opportunities.
Let's just have a look at the stakeholder council recommendations and how well they are addressed in this version. The stakeholder council obviously commented on the earlier version. They do make a point about ensuring that the multi-stakeholder perspective is acknowledged in the document. I'm not sure it is, and perhaps that's something that could be added.
Yeah, we can look. Yes, yeah, we can look to include this in where we describe the approach to creating the standards. Maybe there's a sentence that we can include. Yeah.
Okay. Is there anything else in the stakeholder council feedback that anybody thinks we need to consider still to be addressed, or have we covered it all? Okay, I think we'll take it as being incorporated then, or to be incorporated. We can get back to the stakeholder council and let them know that we have considered their comments and they will be incorporated. I'm wondering what we do with this next. There are a few changes that need to be made before it goes back to the supervisory board, I think.
Yeah, what I suggest is we, as part of the summary, we inventorize all the actions from this conversation, and then we have to reproduce this with the changes for another round with the GSSB. Depending on our discussions later in the private session on the meeting schedule, we would try to have this for the meeting in September, I think, at this point with the change. And then we could go from there.
Okay, thank you. Okay, so this will come back to us then. So I think we're pretty happy with it the way it is. We're just looking for a few more changes, and we'll come back to it then. Jeff?
I'm sorry, forgive me if I misunderstood. Is the plan to come back to the GSSB before requesting feedback from the supervisory board even?
That's what I understood to be what was discussed.
So my personal view and would submit for consideration would be, for the sake of expediency, a lot of, if not all of these comments that were discussed today were largely editorial, in my view, and we could make those changes within a week or two and get it over to the supervisory board earlier. I don't know what their next meeting is. I guess it would be a couple months out anyway, because of their most recent meeting was just a couple weeks ago, if I recall correctly. So maybe it's a distinction without a difference, but I want to lean towards urgency and expediency wherever possible.
Yeah, I do agree with that, but I thought perhaps Bastian made that suggestion because a lot of people are going on leave. I'd be happy to have a look at the amendments that had been made in light of this, if everyone was happy with that before it went. Charles?
Yeah, I was going to ask. So I think we don't need to wait 2 months for the next
I
one.
can't hear you very well, Charles.
Sorry, can you hear me now? Hello?
It's a little better. You have to speak up.
So is it better now? Yeah.
Yes.
Okay. Sorry, that was the wrong microphone. So I agree that we don't may need to wait that long, but I think because of I know it's editorial, Jeff, but I think editorial are very important wording in some of these paper, and so because there's so many minor, I think it's good to see if on the version to do one more round. Maybe Tom suggested on the chat through file stage. I'll be feeling more comfortable going for the final version once than just looking at these verbal changes we did today. But we can do that maybe in the next couple of weeks, as Carol said, maybe because people go on leave. But I would like to see the final version before it goes out, not just based on the comments today. So if we can see a version that with changes and then one more round, give us a few days to file stage edits and then go. So kind of in between what we talked about. Yeah.
Yes, and that would be much better than just me looking at it. If it goes on file stage, anyone can have a look at the changes that have been made in light of this conversation and add comment.
Yeah.
And we could do that fairly quickly. If we have, say, a week to do that, will that be enough for people?
For me, it'd be correct. Yeah.
Yeah. Okay.
Yeah. Yeah. But so we will implement that for the next meeting then, because I don't think we're able to put this week. But we will put it on file stage. And does that mean you don't want any further discussion of it or review as part of the meeting? So we're basically combining the two approaches.
I think the question was not delaying sending it out to the supervisory board, but wanting to see it before it went out to the supervisory board.
I'm not sure about the SC schedule, but the supervisory board is meeting later in the year only. So there will be plenty of time for this to be reviewed. So we will let's agree we do this outside the meeting. We will present all the changes to the GSB on file stage. We will give a deadline for it, and then we share it with we ask Carol to share it through the GSB secretariat, through our governance function with the governance bodies. Yeah.
Okay. Thank you very much. Thanks for all the work on it. It has come on very well. Thank you. Okay. Is there any other business for the public session? Okay, thank you. Could we then close the public session, Gillian?
We can, yes, we'll let you know when we're offline.
Thank you.